Is anybody there? Because I was talking to Tim Bone the other day and he was saying, paraphrasing here, but year one's the toughest, but after you get to like year two, year three, then it starts snowballing and the money starts snowballing. And I can see that I'm getting significantly better, going from winning 20% to winning on average 40 to 50%. It's just time. So all I'm saying is, stay with me. Stay with me on this journey. I've been doing this cataloging my journey for a year. Nobody else does it. Stay with me. Tough market to play. What's up? Jonk does penny stocking, episode 27. I've been traveling a little bit, but with Jesus Christ and God Almighty on my side, I can now say I'm back. I created a monster, and somebody wants to see more, so they want shady, I'm top little. So this week's show features the one and only Tim Gritani. Tim Bone calls him the golden boy, and Mark Crook. And the lessons are invaluable. It's basically like last month I had 84% win rate, and then some plays didn't come around in the last 2 weeks of the month and I dropped significantly. And the reason is because I didn't differentiate a good play from a bad play. So I went really back to basics, and it's volume by Mark Crook. And it's multi-day breakouts, like the solid fundamental setups that you should take from Tim Gritani. I'm so excited to show you. Now that I've got this knowledge, I do feel like I'll have this green month. And honestly, if I don't, this is a challenge to you, Tim Sykes. Tie me up in motherfucking Florida at your conference in front of 500 people. Tie me up like this, like this, like this. Enjoy the show. Crook has given a lot of guidance on volume to the challenge students on this video lesson, on the webinar last week, and also on a pre-flight checklist webinar. And it's so important for players like CYTR, which actually it closed in the 80s. He didn't know this at the time, but it opened up in the 90s and then tested one a couple of times before turning more into a short reversing, because it's topped out these last few times around 1. But Mark just really emphasizes the importance of volume, and it's a really good reminder for me and everybody else. It's a must watch, this one.
The number one thing that stood out to me on this stock in early trading, and you can see the stock traded 45 million shares, over 40, closer to 50 million shares. Actually, it was 53 million shares on Friday. But the thing I said in the chat room, in the challenge chat room, was that it traded 15 million shares in the first 45 minutes to an hour. And if you look back to their prior run-ups, and as I said to you guys many times in prior webinars, my volume webinar, I talk about it in the pre-flight checklist webinar, you've got to see the volume, and if a stock can sustain that volume for a good period of time in order to spike ideally towards prior highs. And in this case, the highs were all the way up in the 90s. And the only way that stock, just in general, is going to spike towards those highs and potentially run multiple days is if it gets big volume. And this was a perfect example. So you can see once again 53 million shares traded, and I underestimated the stock. You can see initially it had the morning spike, a huge 3 million share volume spike from the 60s all the way to the 80s. And just to show you why it was spiking, they had a global strategic license with Nancell for...
Yeah, and Mark gets into the context as well, but the most important thing is the volume, because if you look at the previous days as well that it spiked so much, it had the same level of volume. And it's just a good reminder for me and everybody else. Trading in July, really solid 84% accuracy first 2 weeks, and then the last 2 weeks the plays dried up and I couldn't differentiate a good setup from an average setup or a bad setup, and I got a bit too loose. And then when I've watched this chapter of Tim Gritani's trading tickers, It put everything back into perspective and really grounded me into the basic rules. It was a must-watch, so I'm glad I can share some of it with you guys.
Sykes focuses on another strategy I've used pretty much since I first started trading. Buying OTC multi-day breakouts. Earlier in the DVD, we went over the concept of basic support and resistance on charts. And really all that buying multi-day breakouts is buying a stock as it is breaking past a key resistance point on the daily chart. This doesn't necessarily have to be a stock breaking the new 52-week highs. It could just be breaking above a key resistance level that's lower, as long as there isn't any overhead resistance nearby. I don't want to be buying a key resistance break if a few percentage points later there's another major resistance level, something that could possibly stuff the move. So I do make sure there's plenty of room for the stock to spike. Back when I first started trading these, I really was looking mostly at just pump and dumps. But now it doesn't really matter. I treat all OTCs like they're pumps. Whether it's random momentum pushing it or a newsletter, I'm treating the chart pretty much the same way. The one key thing though is that there has to be good volume. That prerequisite still remains for this setup. There needs to be liquidity, it needs to be tradable. I don't care how great the chart looks, if there's no volume there, I'm not going to bother with it. And while some breakouts do have pretty large moves and really can run crazily, I've seen some go 100% or more, I usually don't make it that long. I'm usually holding for a smaller part of the move. I've never been very good at figuring out which breakout is going to be the one to run 100% or which breakout is going to go 10% and fizzle out. So generally I'm taking the quicker part of the move, holding for maybe a day or two tops, and then I'm done. One thing you might have seen me note on the last slide is that I like there to be at least one red day between the two highs when I'm buying a breakout. Basically meaning I feel like there needs to be some consolidation in there on the daily chart. So what do I mean by multi-day? What do I consider to be a multi-day breakout? Let's look at this COCP chart as an example. The bottom left chart here is the daily chart of COCP. You can see that we have pretty much a double top in the 112, 113 area, and as it breaks past that, that is where I see the multi-day breakout. It's had plenty of consolidation days in between, plenty of red candles. Now what I would not consider a breakout is the next day. Yes, the stock gaps up, yet...
Yeah, so it's really interesting to consider the breakout is actually this level here and to see if it can hold, but it's not up here because then you haven't got as good risk reward, and it's buying it on the first green day, not the second day, not the third day, not the fourth day. It's really key lessons for me. Thanks so much for watching the show. Appreciate it. It's a real challenge to get this green month, first green month since I've started, but I was so close last month. And I always like to summarize these things with a bit of a song to inspire you all. So here it goes. Pretty excited about this. Let's turn it up a bit. Mama, I'm going for green, but a gun against my head. Lose discipline at last, I'm dead. Ma! Sykes! Well, tie me the fuck up in Orlando. And he's seriously not fucking around! He's really gonna do it on stage and put it in his motherfucking DVD. Oh! Yeah! Now's the time to triumph! And I'm ready cause I'm so filled with pain to get another fucking doer! I'm a fucking doer! I'm the doer! We will not fail. Live the dream. Comment, live the dream. If you believe. I'll see you later.